Hi, sorry, can we start?
Yes.
Okay. Hello, everybody. Welcome to this third series of, uh, you know, uh, working around your money. And today we're obviously discussing insurance as a topic. I thank you for joining in and see some common names on this forum. Since we're a very small group, I would really encourage everybody to switch on their cameras. I know you look that much more prettier when we see you in person. So don't worry about how you're looking. It's right. I think we're a small enough group to have a very informal chat. I would actually invite Zeal from Team Salt to conduct this session with us. Zeal is part of Team Salt or Money Coach with us. And she's been working in the wealth management and insurance space for over a decade now. She used to be with City Gold for a really long time. And I think she has hands-on experience of working with clients and insurance companies. So I'd really like to take advantage of that. I'm obviously here, and we'll keep the conversation going between both of us. But Zila, I hand it over to you at this point.
Hi, thanks so much for the introduction, Nidhi, and hi everyone. Very good evening. Without taking too much of your time, I will just quickly start sharing my screen. Before we even get into the whole discussion of insurance as a topic and as a subject, for a matter of fact, I know it's a bit of a taboo, so I'll be supporting Nidhi and we'll be conducting this and we'll have a discussion around it. It's not about, we talking and you listening. Let's try and keep it as a conversation. And any doubt, any questions, anything that you feel you would want us to explain again or something that we've not spoken, you want us to ask, you can put in the chat, raise your hand, we'll just have a discussion right away, okay? So to start with, we've all believed this and we've heard ourselves discussing amongst each other, life insurance is expensive. I don't require, I'm young, I'm healthy. The premiums keep increasing. I don't understand where is it going. And, what if I don't get any money back? Like, what's the point of even doing this, right? However, what we are going to clarify today is insurance is not a way to save your taxes. It's not your retirement security. It's not an investment, but it's a way to manage your risk. We always have, we have that intuitive nature of ensuring that we don't do anything that's beyond our risk capacity. So insurance is a part of it. It's a way to manage your risk. So we'll jump on to, there are a lot of insurances around us. Like we've heard about them, we've known about them in one way or another. To start off with car insurance, it's legally mandated. And I think by the fear of it also, we all have a car insurance. We ensure it never expires. We never keep hoping that, insurance liya hai. Let's just ensure that I make at least one claim a year because I've paid the premium for it. It's for a mental safety that if I'm traveling and God forbid if anything happens, the expenses for repairing my car are taken care of. More often than we even notice when we are traveling, when we are booking an international flight, especially if you're booking to make my trip, there's a small icon, like a small checkbox that would you want to opt for a travel insurance. And we often subconsciously ensure that we check it because they give a very simple example. What if you lose your luggage? This insurance will take care that your luggage reaches you safely. In case if it does not, you're compensated for it. So we opt, because it looks like a very small contribution, we opt for a travel insurance. All of us would have recently renewed our lockers. Like the banks would have reached out to you to renew your locker agreement. There has been a mandatory addition of insurance to your locker as well. We love our home. We love the place where we live. So we do opt for home insurance in case if anything were to happen and we would want to maintain it. Today, what we're going to talk about and what we would want to bring more clarity around are two aspects that should be even more important than any of these. That that would impact us directly and our loved ones directly, which is health and life insurance. So I've heard a lot of people say this, okay, that I'm young, I work out every day, I run a mile, I've done marathon. I don't need it. I'm absolutely fit and fine. Surprisingly, but you still need it. Okay. So just a fun fact, we have noticed when there is an increase in the price of vegetables, like tomatoes getting expensive, onions are getting expensive. No one has noticed the subconscious growth in inflation of medical expense bill. Especially in the last 2 years, we've seen a 14% increase in medical hospitalization bills, which simply means a normal blood test, which would have costed you, say, 3 years before or 5 years before, or 2000 to 2500 for your routine checkup, will now very easily cost you somewhere between 5,000 to 5,500. It is such a huge increase in price, but we don't notice that because that's not a part of our daily conversation that we have around it. So there's some myths, some misconception around why and how insurance, how your health insurance works, which we would want to clarify right now. Like for all working women or people who have their spouses working, they have this comfort of having a cover from the company. Like I already have a 8 lakh cover from my company. My corporate is covering myself and my family. Why would I need any additional cover? It's more than enough. However, the fact is this cover will last and will take care of your family only till you're working with that organization. Once you stop working and maybe once you're retiring, this cover will also retire along with your retirement, right? Then we have this, I would say, this family tradition of having a family floater cover where all the family members are covered under one roof. So we are comfortable that way that, we have a family floater of 15 lakh, we have a family floater of 20 lakh. However, we misnote this thing that this is a shared cover. This is not your individual cover. A lot of factors go into deciding how much would your health insurance premium be. Like, what is your current age? What sort of job profile you are in? If you have any pre-existing medical condition, in case if we have some medical history in the family, which could be a possibility of hereditary inheritance for us. All of these factors combined conclude on how much would a health insurance actually cost us. So the sooner we start, the sooner we take a conscious call of opting for it, the wiser we are. We are making a long-term safety net for ourselves. Now, it's a very fair question that, okay, agreed. I understand that I need a health cover, but how much should our cover be? There are two parameters that we can count as a thumb rule. One is either your health cover should be at least 50% of your annual income. This can include your corporate cover also. And incrementally, whatever is the gap is how much your health cover should be. And for anyone who is like, I'm maybe a freelancer or I have my own business and I don't fall under the corporate cover in any case, the bare minimum that we should have at any given point of time is a 5 lakh worth of health cover. Anything that you all feel that y'all have heard, like there have been more myths that y'all have heard or more points that have not added too much clarity that doesn't even make sense to have a health cover? Okay, I'll leave that thought open. If you have anything, I will keep checking the chat box in case if there is anything that you would want to know. What I would want us to simplify for ourselves is these jargons which are used very frequently in and around related to your health covers. Okay. First one we hear very frequently is premium. Premium is the amount you pay every year to get the required cover. So it is the amount that gets deducted from your pocket towards purchasing or opting that amount of health cover. The word claim basically means the amount of hospital expense which needs to be settled. So I got admitted in the hospital. After a week, when I was getting discharged from the hospital, my bill was say was 5 lakh rupees. So when I raised that to be paid by the insurance company, that is known as claim. Then we have life assured. Life assured basically means the person for whom this claim is being made, or the person whose life is covered by taking this specific health cover. Then we have mediclaim cover. Mediclaim cover is the amount for which I can raise a claim. So, like we discussed, bare minimum, everyone should have at least 5 lakh worth of medical cover. This is what it means that in case if anything happens to my health and I'm hospitalized for the same, I can claim up to 5 lakh rupees. Claim settlement is the entire process of getting the amount from the insurance company for the claim that I have made. And we have renewal, which is a very good practice so that my covers lasts and I can make the maximum benefit out of it. We need to renew and pay the premium every year so that my cover stays. So what we have done is we've just taken an example, very simplified way. Monica is an intern, she's 25. She has opted for a 5 lakh bare minimum cover for herself from Star Health Pro, for which she pays a premium of 5,420 rupees per annum. Unfortunately, one day she met with an accident. It was not a major accident, there were minor injuries. She was kept under a hospital, kept under doctor supervision for a day and just discharged next day. Because she had a medical cover, all her bills that were generated were settled by the insurance provider, and she just went back to normal and she was just absolutely fine. Wherein Rachel, on the other side, she's 25, she's a freelancer. She puts all her savings into stocks, in purchasing stocks. She also unfortunately met with an accident. Though she had made very minor injuries and she was kept under observation at the hospital for a day, the next day hospitalization bill was 86,000. Now, because unfortunately she had not opted for a cover, she had to pay that from her pocket, and all her savings up to then were used up in one hospitalization bill. It's very clear to understand that it is wise to have a health cover, because that one bad day or that one unfortunate accident can actually take up our months and years of savings in one hospitalization expense. So now we spoke about two concepts, right? We spoke about health, and the second thing that we're going to discuss is life. I believe so far we have reached a conclusion that, okay, it makes sense. I should have a health cover for myself, which is a very wise decision. So if I have a health cover and, health and why then do I need another insurance, right? So the clear segregation point is health insurance is for your medical expenses while you are alive and your hospitalization expenses for the treatment that you require. However, life insurance helps your family to function financially in case of untimely demise or any unforeseen event that happens to us. So, this is for our loved ones more than for ourselves. So, life insurance basically is like a parachute. You don't need it until you need it. No, this is not for your tax saving or investments or to secure your retirement. The real reason, like the genuine purpose that you buy a life insurance is to protect your family and their financial health so that they can sustain and live a similar lifestyle even after you're no longer around them. So it is basically a cost for your peace of mind that they will be taken care of even if we are not around.
Zeel, 1 second. Since we've sort of moved on to life from health, I just wanted to pause at this point and see if people had any questions around health insurance, and then, we can move to, because it is a slightly very, very personalized topic. Yes, Nidhi, please. Do we need to unmute her? Can I request the host to actually unmute everybody? It's a small group. If you're okay, yeah.
Yeah, yeah, Nidhi, you can hit yourself.
Yeah, hi. So my question is actually regarding life insurance.
Okay, sure.
If there is a lady, a woman, where we are practically, she's not earning, let's say she's a housewife. In that case, how do we take her life insurance? Because I have seen someone facing this in the family earlier. Uh, and now, for example, for a young kid, I mean, it's just like health insurance. I believe that life insurance is something which should be taken even for a kid. I would like to take it even for my 20-year-old. It's life is life. It's as simple as that. It has nothing to do with being old. So then, now she's a student. She's not earning. She's a kid, or forget that. Even somebody who's 45 or 50, a woman.
See, I
Or
mean, yeah, so I hear you. Nidhi, the two things. So, and I think Zila is going to cover it as we go along. Life insurance works when you think there's economic value of the life that you're trying to insure, right? Now, of course, whether you're a homemaker or you're a freelancer, or whether you're a man or a woman, as far as you have dependents who are depending you on anything, even if you're just taking care of the house and they're dependent on you, that you're absolutely bang on. Even housewives should have house cover, because you do have dependents, right, that you're taking care of. And then what happens? I mean, there is an economic impact, on the family, even if the homemaker sort of isn't around, someone whom the family is dependent. And the reason I was smiling was that Zeel and I actually worked extensively on this yesterday, because we were trying to, find this out for somebody in terms of the rules and what are the Supreme Court rulings around this. So I'll let Zeel share her learnings on this. But as far as the kid is concerned, see, there are two things. One is emotionally, it's a bit of a resistance area. Most people don't want to insure the kids. Like, you don't even, I mean, it's not even something that you'd want to think about, right? I mean, what would I even do with the money if, as a parent, if I lost my child? I mean, it's not, it's like unthinkable. And of course, there has to be insurable interest, right? So if there is going to be no economic value, that's why students, ideally, you cannot life insure unless, and that's why for these kids, usually the life insurance works in garb of structuring it with an investment piece, right? And of course is therefore then expensive and comes with all the caveats of lock-ins and stuff like that. So maybe I'll let Zeel answer the housewife question, and as we go along, we're going to see some of these products where how under a ULIP and how under an endowment plan, why I think in my head, I've always all my life been totally averse to the idea of ULIPs, and we're going to discuss it as we go along. So Zeel, you want to answer the housewife question first, and then we can cover the rest as we go along.
I think I'll park the housewife's question for a bit because there will be words and terms which will be a bit jargonized form. So I will cover those, and then I will definitely, like, I've made a note of it, and I will address your housewife question. And also to add, Nidhi, like you mentioned, insurable interest, or the person should have economic impact. Like here, we are not taking a life insurance from a perspective of earning or getting something out of it. It is just for a peace of mind that in my absence, the way my family is functioning financially, the cycle should continue. So, park the housewife question. I'm definitely going to come back to that. However, for students, based on the guidelines, currently we do not have an option for opting for a pure life insurance. And I'll cover what Nidhi also mentioned about they structure it in a way that they missell you different sort of products And, they term it as life insurance, but they actually don't serve the purpose of the insurance that you actually need. So to start off with, there are different types of life insurances, right? Primarily, they are broadly classified in three classification. One is a term insurance. Second is a money back plan, which is also known as endowment policy. And third are unit linked insurance plan, which are also famously known as ULIPs. I'll go through each of them briefly. What do each of them mean? Term plan is pure vanilla life cover, where I pay a specific amount of premium and my life is covered, so that if tomorrow, for whatever reason, I have an untimely death, there is a sum which is which insures me, which covers my life, which is paid to my family, and they can make the economic benefit out of it. Money back plans or endowment plans, a lot of us would have definitely some point of time either purchased themselves, or parents would have purchased LIC policies, which ask you, or rather, which make you commit to paying a premium for the duration of 5 years, 10 years, 15 years, varying, and promise you at the end of 20th year or the end of 30th year, depending on how your plan is structured, you will get some money back. Psychological comfort is if I've invested and I'm investing for a duration of 10 years, but later on I'm getting something back from it. So it's fine, whatever I've invested and some more money I'm getting back. Third is unit linked insurance plan, which is very heavily sold around, which says that, okay, we make it even better. You invest for a duration of 5 years or 10 years, we will give you money back along with adding some market growth to it. Like we invest in markets also, we do kind of combination of mutual fund, kind of insurance, and we give you a combination of both. There's a lot of gray area in what's actually happening. So we'll just move on. We'll just give you an example of how they look and what are the things which are mentioned in those small terms and conditions which we actually misunderstanding and looking through. Okay. So we've just drawn a very parallel comparison in an endowment policy where they promise you to get some money back. So an example, we commit to paying 1 lakh rupees for 10 years. That's every year 1 lakh we are committing. By the end of, so the maturity amount at the end of the 20th year is 30 lakhs. So in our head, I have paid 10 lakh rupees. By the end of 20th year, I'm getting 30 lakh rupees. Like it's fine, right? However, two things that we have completely missed observing. The whole intention for taking a life cover is, or taking a life insurance, is to have a cover so that if I am not around, my family gets supported. The practical case of cover is only about 10 lakh rupees. If anything were to happen to me in this 20 years of timeline, while I get the money back, what my family would get is merely a 10 lakh rupees, which I don't think is going to be too useful to them, right? In ULIPs, because they mentioned that they have a combination or they invest part of your money in markets and they give you an insurance, which sounds pretty attractive. Again, what is the purpose for us buying is the actual life cover behind it, right? Which is just 10 lakh rupees. Yeah, definitely during the end of 20th year, I'll be getting a 40 lakh rupee, 43 lakh rupees. If I am around, and I'll be happy that I made a very wise choice. But the core purpose why I am purchasing a life insurance is the life cover, which is not being solved over here. Pure vanilla term insurance is something that we as Salt also say is the right choice. Look over here, right? We're just paying 15,000. And what I'm getting as a cover is 1 crore. So in the next 20 years, if anything happens to me, would 1 crore make a difference to my family and help them stabilize at least for the coming couple of years? Definitely yes. So that's the economic difference. And I mentioned about the terms and conditions, right? So there are different charges which get charged to you each year. You're paying a premium in both an endowment policy and ULIP policy, right? So there are fund management charges, there are commissions that get paid to the multiple chain of agents. There are charges which are known as to ensure that we are able to pay you. So there are so many amount of charges which look initially a small figure that, okay, it's just a subset of it. But what we don't understand, that's eating up on the amount that you're actually investing. So when we are taking a cover to ensure that I have a peace of mind, 1 crore is something that would give me a peace of mind. That if I'm not there, that will take care of at least the financial deficit that my family will have to face in my absence. I will kind of run through these jargons and then I'll come to the housewife part, because these jargons will help us understand that better. So as compared to a health insurance, there are few additional terms that get linked to a life insurance. There is a concept of proposer. Proposer basically means is the person who is financially liable to make a payment, right? Like proposer is the one who is paying for the insurance policy. I am working and my spouse is not working. So I have the capacity of making a financial commitment or a financial payment, right? So I can propose the policy, like I can make the payment on behalf of my spouse. Life insured is the person whose life is covered, right? So my spouse in this case is the one whose life is insured. So taking the previous example, I am paying 15,000, but the cover of 1 crore is of my spouse. Premium payment term is the duration for which the fees or the premium that for availing or for opting for this life cover needs to be paid. I'm just going to connect this to a previous example, which was 10 years that you're paying for 10 years. So that premium payment term till which my liability is to continue making the payment is basically 10 years. We have the concept of policy term then. So policy term can be longer than the premium payment term also. So I am paying the premium only for 10 years, but my policy lasts till 20 years. So that's when this benefit, or I get the money back, or my term cover expires. So that duration on which the policy expires is known as policy term. We would have heard a lot around the word riders. Riders is just like a topping, right? So it is the option to customize it the way we want, or the way our lifestyle is, because everyone has a different lifestyle, right? One more point that I would want to kind of add to how a health versus life are different. In a health insurance, we pay the premium every year. Like we have to renew it every year. The year we stop renewing it, our health insurance cover is kind of, I would say it's no longer valid. Same goes for life insurance. However, here at the day zero, when we are signing the document or when we are opting for, say, the term plan, whatever amount is fixed, like in our example, it was 15,000, that stays consistent till your entire policy, your entire premium payment term. That will not fluctuate, that will not change. In case of health insurance, you opt for it, they have age brackets. So say 20 to 30, 30 to 40, 40 to 50, there could be, I would say, a percentage increase in the health insurance premium that they charge you. It is a negligible growth, but there could be a percentage increase because the probability of you opting for it, the probability of you making use of the medical cover for higher bill expenses increases. So that is, I would say, a difference between the two. Coming back to Nidhi's question, for housewives, for the longest period of time, we did not have any option or any way to opt for a term plan for a housewife. After a lot of, I would say, fight that has happened internally, the regulator now has finally agreed that yes, housewives have intangible economic value, because in case if anything were to happen to the homemaker, a lot of things go haywire. We have to make adjustments and we need a lot of external support to fulfill that gap, at least to function in the home. What goes through internally, no one can bridge that gap. But definitely there is an economic cost attached to a loss of housewife. So now I would say it's as recent as last year only. We have got approval, like IRDA has given approval that we can give term plans for housewife also. However, the case will be over here of proposer and life insured. That the husband or the earning member of the spouse basically can be the proposer and the life insured can be a homemaker. The reason why a proposer needs to be an earning source or earning member is it is because it's a legal agreement that I will pay an X amount of premium for X number of years. It comes from the comfort that the premium will be paid and there is no wrong reasons for, or there is no alternate reasons for purchasing a term plan for a housewife. So this is to ensure that no one is taking it from any other intention. Yes, Nidhi, please tell.
So lovely. Actually, that's exactly the point you came at. So my point, so this is for a very specific case, and this for a friend who's a single woman,
Okay.
no proposer, right? I mean, I was talking about a particular situation when I asked a question.
Okay.
But she has a corpus, right? But she's not earning. So in that case, I know because she's been refused life insurance, term insurance a couple of times.
Okay.
So in that case, is there any way or any term insurance which she can get for this specific case for her? Somebody who's in her 40s, maybe
So
turning 50 soon.
what I would rather recommend is we have partnered with Ditto who are experts in insurance. So there are two ways, right? So one is you provide your salary slips. Second is your ITR copies. If you're filing your ITR return every year, based on that also allowing or giving a term cover is possible. I will not promise you that we definitely can do this, but there is a scope that we can find a work around this, that if she does not have a steady income but is filing her ITR, based on that, if we can try for a basic cover. So if I may ask, does she have dependents in her family?
Yes, she does.
Okay, okay. Any thoughts on
And
this?
she does file the ITR, I'm sure of that. Because I said that she has some corpus, but there's no running income and there's no, like she's showing that she's working.
Okay, okay. Nidhi, any thoughts that you would want to add to this?
No, so I think based on ITR and justification of the dependence, we could definitely try in this case, Nidhi. And like Azil already mentioned, maybe you can get in touch with, if you could uh, share details with Gayatri later on, we can try and help her specifically because we have tied up with this insurance company called Ditto. Basically, they're an insurance broker. So, they work across all insurance companies. It's not only for one insurance company. So we can take their help in figuring out for specific cases like that. If there's any insurance company in India who would be willing to do this.
Thank you. I'll do that.
Yes, Sandeep. Sorry, we'll take that question.
Yeah, thank you. Actually, my question is more of a follow-on from what Nidhi has just asked, maybe for just education. What has the person's income got to do with their ability to take a term insurance? It should be more just a case of affordability. Can I pay the premium year on year for the tenure I've taken, whether I'm earning or not? Maybe this lady has financial savings from the historical years. So what's the logic behind that?
You answered the question yourself, Sandeep. It is about being able, the capability to be able to pay the insurance year on year, and hence what is the life, and also to determine economic value, right? So for example, you could have economic capability of earning, or like the economic loss of the life not being there might only be 1 crore, but you might file for a cover of 50 crores, right? So it's the capability of repaying plus the actual economic loss. And those are the numbers that actuaries run, both of these in conjunction, to determine what is the level of insurance that one is applicable for. And which is why we said that it's all right if she doesn't have salary slips. Even if there are ITRs, we can try and see what best can be done.
Yeah, but
And
then
to
if you take a converse scenario, sorry, Nidhi, if you take a converse scenario, let's say I am employed today, I have all the evidence to prove, and I take a term insurance, and then I stop working. The insurance provider doesn't come back and ask me my ITR every year on year.
So to add to what Nidhi explained, there is a
Absolutely. So
concept.
it might actually make sense then for someone who, to take it at the time when they are able to show the best, sort of economic, and which is not exactly what we are saying, that it's better to do it at a time where you are younger, you are able to show that you are maximum economic value and the impact of your loss is going to be maximum to the family. Hence, like for example, that is the reason why even though you could be earning, whatever, but exactly the same probability. One is, of course, the life value, and second, the fact that does one really need insurance when they are 60, because the economic loss to dependents is typically not that very high. So those are the two calculations that work against you, in fact, at that age, right? So it is, I don't know if
I'll just add to your point, Nidhi. So there is a concept in life insurance which works as a thumb rule, which is known as insurable interest. So what does that mean is that when I'll just take an example of very simple husband and wife, proposer and life insured. We've seen it in Bollywood movies, and it's funny and it's a very dark humor, I would say, but that is true that there have been cases where husbands show that their wives are working in their company, show that they're salaried, take a very large cover on their name, and then suddenly happens in no time there is an insurance claim happening. Like we see it in Bollywood movies, but trust me, that is something that actually happens. So there is a very, I would say, thin line between how can you even judge that what is my economic value? Like, how can you say that 1 crore of rupees is what my money worth is? That is not what they're trying to say. What they're trying to say is, even if you have a bare minimum 1 crore of cover, which will be keeping in mind inflation, keeping in mind the expenses, your current livelihood expenses, and it is for sustenance that, example, I have a financial loss today. I will take a year to recover from that, sustain, and maybe start earning after that. So for that duration, till when I stand up on my legs, this amount is going to take care and ensures that I don't break financially while I'm recovering emotionally, right? So this whole concept of insurable interest comes into play, so that you're not over insuring or you're not taking insurance for any wrong reasons. Nidhi, yes, please tell me, you have a question.
Yeah. So taking it ahead from the same point, whatever you conveyed, again, trying to understand from the gentleman perspective also, uh, just like health insurance, right? The entire idea of an insurance company also should be, किसी ने premium दिया, तब तक valid है. जब नहीं दिया, तो खत्म. See, let's understand, right?
Right.
So when it comes to life insurance too, I'm ready to pay, right? Whether I'm earning 10,000 or 1 crore a month, or whether I have a corpus or not. As you said, yes, some proof in terms of something, whatever, let's say, obviously, ideally an earning member, or some corpus or an ITR return, whatever be it. Now, till I am ready to pay that amount as an ex person, and I'm saying I need an insurance, how is that earning a mandatory thing? How does it matter to an insurance company? Why? The entire idea for them is getting the premium, right? How
Nidhi,
it's
that's
coming, where it's
exactly what
coming.
we're trying to say. So, for example, if your economic value is 1 crore, but you're filing for a 10 crore term insurance, then there is more than what's meeting the eye here, right? I mean, and one doesn't know. So, to protect, I mean, that is why the regulator has set those limits and those calculations for being able to establish your economic value, because we're again and again saying it is about establishing your economic value. If you were not there, if you were there tomorrow, what would you be earning?
Great. So in that
Right?
case,
Yeah.
given that case, wonderful, that works. Okay, so I've always been a salaried white and belonging to service class family, right? Paying your taxes, just no option. Just trying to understand then. Let's just
Yeah.
not talk on a very practical level.
Yes, yes.
For business families, right? They're very simple. Let's say an earning is X and Y is shown. Okay,
Absolutely.
right? So this means that they cannot get a cover that cover will be given on the basis of the X shown, right? Never on the
Exactly.
basis of Y what
That's
they're earning.
exactly why there is a difference between maintaining your books and living your lifestyle.
Great. Okay. Second thing then. In that case, then how would they determine the value of a housewife to give her a life insurance? Somebody who has
Like Zee
typically,
mentioned, it's based on the income proof of the proposer in that case, specifically in the case
Oh.
of housewives.
and that's where this gets tricky in terms of a single woman who's
No, so that's
obviously.
why we said now that if there is ITR, then let's look at the ITR.
Okay.
Yeah, I
And
think I thought you already answered that.
And that's when, like, I'm just kind of derailing from what we just spoke, but this whole money back policies or ULIP policies, they end up pitching and selling their, I would say, concepts or hidden concepts that no, we are also giving you a life cover. Practically speaking, financially speaking, they are not adding value, but because they are not as, I would say, as stringent as opting for a term cover, because we see the difference here, right? Just by 15,000, I'm getting a 10 crore cover. Here, I'm technically paying 1 lakh for 10 years. Like, I'm just kind of segregating it. And I end up getting a 10 lakh cover. So it's practically what I'm paying, I'm getting a cover for it. We don't look at that way. We see by the end of it, I'm getting 30 lakh. I'm getting 43 lakh. I'm happy with it. But if my core purpose or my core requirement is cover, these don't take care of my cover requirements. So that's how I would not say they get missold, but in these areas or in these cases where a term plan becomes very strict and very stringent with the policy that who can apply for it or how much is their economic value, with a money back policy or a ULIP policy, it is not as strict. So I wanted to do this. I'm just going to quickly stop sharing my screen and I'm going to do this activity live over here. So we have something which we all can play around with, known as a term insurance calculator. It's widely available on Google. We're using the Ditto calculator here. So how does it get determined that how much should my term cover be? Like, I would not say exactly determining my economic value, but how much is it that bare minimum I should have for a comfort for myself, like a comfortable peace of mind. Just taking an example that I am currently, I'll just for sake of calculation, I'll say I'm 40 and I plan that my family, my dependents till the age of 60, I would want to take care of them. I would want to ensure that if I happen to die before 60, there should be some corpus that goes to them. And my current monthly expenses are, say, 1 lakh, and I have no liabilities right now. This shows us that your 1 lakh of expense today in 2043, that's when I turn 60, keeping in mind inflation, would become a monthly expense of 2,79,000. So that's why a bare minimum, like a sustenance cover that I should opt for, is 2.5 crore. This is just to give us a background of what should be an ideal cover that I should have. And then the details of which company, how, and how should I go about it, which one is better than which one, what are the riders that I should go for, how should I customize it for my need. That's why, like Nidhi mentioned, we've partnered with Ditto. They are unbiased because they don't have their own product. They have tie-up with multiple channels. However, it's not like a policy bazaar where there is no one addressing you. There is a person who will talk to you, will understand your life stage, will understand your risk-taking appetite, will not only help you We'll give you 2 to 3 options that you can pick from. And then after that also, like the whole end-to-end helping is what they'll help you with, like from opting for it. More than anything, I would just think that just to have that open conversation that this is my health cover, this is my life cover. Am I enough? Do I need more? That is something that, you can have an open chat around. So I see that we have a couple of, yes, Nidhi mentioned. Okay, so I'll just, before I read out, I just want us to have this thought while we've had this discussion, and I believe there will be a lot of more questions which we will be now open to answer. That just think about this. Like, do I have a sufficient cover from my company? Does it have the flexibility, or does it take care of my actual need? Or does it actually take care of the risk that I might face, not a generic, cover that I would need? And how much cover is enough for my family, like at my current lifestyle or the current lifestyle that we are surviving? If I were not to be around, how much would it actually need them? Yes, Nidhi.
Taking from what you said, as in what my family would need in the future, right? So in that case, do they take into consideration who or how many dependents and what's their age when
Yes.
they? Okay.
So the calculator that we just showed over here is a pretty basic one that is just to give you, I would say, a first starting point. But when we get on a call or when we make it personalized, that's where the personalization comes into that. Who are my dependents? And it could be like if both spouses are earning, then your contribution would become half, right? Like half is contributed from your partner and half is contributed by you. So maybe that also, so all of that, or today I don't have a liability, but we're planning to upgrade our home, or we are planning to take a loan, a larger amount of loan, say for my child's education, which will happen a couple of years later. So that all also can be incorporated and a very, I would say, transparent recommendation given around. So, like Nidhi mentioned, I'll just read it out for all of us. Like, health insurance has to be personalized. It should take care of your existing diseases. It has things like waiting period for existing diseases and what sort of room you would want to opt for and how fungible they are. Wherein the covers that we have from our corporates are like one size fits all, right? It might not take care of your personal comfort of how would you want to be treated or where you would want to be treated in what sort of hospital when you're not keeping well. So a lot of your recovery phase is a part or is a subset of how you've been treated when you're not keeping well, right? So yeah, I would say we need customization to a certain extent. So that's why having what's already there is there, but having something only for your specific need is also recommended. So I would just want to leave the floor open for questions. We have covered the very basic, I would say, basic concepts and basic terms. There is like Nidhi mentioned, there are things about waiting period, room rents. Those are in-depth conversation which comes to your health and similar concepts with your life insurance also. But today we just wanted to leave this thought that, why is life and health equally important? Like we mandatorily ensure that our car insurance does not expire, or we ensure that, I tick that checkbox when I'm traveling overseas, that I should, if in case if I don't land, it's like it's taken care for my family. And, it's where we've made it mandate, we kind of opt for it. Subconsciously, we should make this mandate for ourselves, just as a hygiene concept. Okay, so we have a question from Bhavna stating, like you shared that ULIP and endowment plan have hidden charges. Are there any in life uh,
Bhavna, I'll take that. Bhavna, that's exactly. I wrote that answer for you only. So I'll tell you, like, typically when you're taking a health insurance, the questions that you need to ask is, what is your copay, right? How much do you have to copay with the health insurance? Second, is there a ceiling to the room rent? So, for example, if you're in Bombay, like I had a situation last month where I had to admit my father to HN Reliance Hospital in Bombay, and the room rent that we opted for was some 10,000 rupees. The plan that he was under only covered up to 8,000 rupees. And I was like, that's all right, we'll pay the rest. But what happens in that case is that the entire bill gets eligible only for 80% of the amount because I chose to go 20% above the limit. So now there are health insurances that do not necessarily hold a ceiling on the room rent. So things like that, these are the questions that you need to ask, that existing diseases, what are the waiting periods? What is the copay option? Is there a room ceiling limit? So these are the questions that you need to ask. There are I mean, no hidden charges
I
really.
meant in terms of term plan, like there are in ULIP and endowment policies. Are there any additional charges?
In
for-
health insurance, there is no concept of an investment. So there is.
No, I'll just do that. So Bhavna, what Nidhi was talking about, she was answering your previous question, where you mentioned that please explain on health insurance, what should we be careful about? So in that case, what diseases are covered? If I have a tendency of any chronic disease, which is very likely to get passed on in family, that is something that you can customize in health insurance. So what Nidhi answered to you with regards to the room rent and co-payment is for the health insurance. Your second question with regards to life insurance, ULIPs and endowment plan, I would not practically call them hidden charges because they're all mentioned in the terms and conditions. It's just that we don't really understand them. That's why we don't pay too much attention to it. In a pure term plan, which is the pure vanilla term plan that we opt for, it is a very simple concept. You pay a premium, you get a cover. They are not promising you that if you survive. So taking an example, I'm 40, I've taken a cover till the age of 60. Touch wood, I am healthy, I don't expire by the age of 60, my cover ceases to exist. I am not getting anything back. It's done. So there are no hidden terms and conditions because they're not promising you that we'll pay you anything in case if you survive beyond that particular age. So I would say in comparison to an endowment plan or a ULIP, the term plans don't have any hidden cost or any those small terms and conditions applied. It's pure vanilla simple. It is what it is. That's it. And when we choose any company, so each company has a different way of determining how they charge premium. Like it is not blanket across companies. That's why we recommend that you talk to an expert who will give you 2 to 3 options. How do the premium change, or why there is like same person, 25 years old, taking a 1 crore cover, company A is charging 15,000, company B is charging 20,000, company C is charging say 15,500. That is the discretion of the company. So what best we do as advisors is we'll give you all the 3 options. We'll explain you the positives and negatives of each. There could be chances that you're okay to pay 15,500 because they have 2-3 more benefits as compared to the first one inbuilt in the product itself. So that's why it's better to choose.
I think you excellently answered this question. My question is more on the lines, like you said, we don't read in between the lines for ULIPs and endowment plan and why we shouldn't go for it, right?
Yeah.
Similarly, in a health insurance plan, many a times we take insurance, but we don't know when you want to claim it, when something really happens. And then you find out, oh, you know what, by the way, this is not covered, that is not covered, this is not something we'll take care of. So what are some of those things which we should smartly ensure that the insurer gives us, or we read in the policy, or we don't buy before that? That is my real question. That because many a times they promise you the world, but when it comes to claiming, apart from the room rent and co-payment, which is obvious, but what are things which are hidden that we should be careful about and know it? That's
Unfortunately, room rent, ceilings, and co-payment and existing disease and waiting period are not obvious. These are things that they never tell us. You have to ask this specifically. They are never obvious. So that's, I mean, and honestly, if you ask these 3-4 questions, you're pretty much sorted as far as health insurance is concerned. There isn't, unless and until it's a very specific and personalized case of something specific, which you might have to discuss separately. But as far as these 3-4 questions you ask, because these are the ones that are never explicitly answered.
And also, if you would want like I would not say a checklist, but like basic checks to be done, there is something which is known as their claim settlement ratio, which you can actually check on the IRDA website, like how genuinely have they settled the claims that have been raised. Then you can check, because it's very specific to which city we reside in. So a particular health insurance service provider, how many network of hospitals are providing you cashless facility, or how many networks they tied up with.
My only thing on this is that, especially for the larger cities and the larger insurance players, right? I mean, I'm sure we're not talking of names that we've not heard of. I mean, if you're talking
Exactly.
MetLife to HDFC to ICICI, it's pretty much the same, right? Whether that be settlement ratios, or these are not going to be life-changing decisions. What are going to be life-changing decisions is, let's say if you're living in Bombay versus living in Calcutta or living in Jaipur, what is the expectation of the room rent ceiling?
Exactly.
And then, what is applicable to you? I'm sure the network of hospitals is also pretty much similar across
Yeah.
plans.
Yeah, that's what. In case if you're in
Yeah.
a very different city,
Yeah.
then it could make difference. So I guess, Nidhi's asked a question and Bhavna has already helped us with it. So if you have a specific requirement with regards to dental, or, we do our laser eye treatments, or we have, so if we want those to be covered, honestly, not all cover that. So we can raise those specific questions with, when we're having a conversation, say for an example with Ditto, you can ask that I would want this option also to be covered. And they will again filter it based on these requirements. But yes, Nidhi, this is not something that's covered by all insurance or health insurance providers. So we can keep it, we'll have to ask these questions to make it customized based on our requirements.
And just 2 things in the health insurance, like you said, I think the premium goes on increasing with age, right?
Correct.
And if you miss 1 year, do you need to start from like day 1?
So on paper, yes, but as if you have paid for 5 years and for some reason.
No, health insurance is something you don't miss, Bhavna. It is an essential. It's not only about starting again or the price. It's also that if you've started at, and that is something that, like how Nidhi was saying, I would take that not only for my 20-year-old, but even for my 5-year-old, right? Of course, the terms and conditions will change as you become, as the person becomes minor to major. But the reality is that that is something that you don't miss at all, because as an adult, if I've taken it 5 years back to me missing one premium this year and then trying to start it again next year, I might have compounded my health issues in a negative manner to not be eligible in the worst case scenario, or have pay a very high premium or a rate of premium or start of a waiting period, which wasn't there because I had taken this premium this insurance policy 3 or 4 years back. So life insurance is something, it's like, it's an essential commodity today. You do not miss your life insurance, your health insurance premium, sorry, health insurance. Health insurance is absolute essential. It's like petrol in your car. You do not miss it in today's environment.
But just taking a worst case scenario, say your premium was due on 1st of Jan and you realized on 2nd of Jan that, oh, I had to pay this yesterday. I was traveling and I missed it. They generally give you a 5 to generally 7 to 10 days of period, like even after you have your due date is expired, just to revive the policy. So it's a limited duration or a limited period, because obviously we're not doing it intentionally. For some reason, for some unexpected reason, we missed paying the premium. So for that duration, you can revive the policy. More than, like Nidhi mentioned, there are two things to it, right? One is, if I have to start from scratch, like if I have to start from day 0, all waiting periods, in case if I have attracted some disease unknowingly, because your medical checks happen again, they will come on surface, there'll be a rate up, etc., etc. That's one thing of it. The second thing of it, I was healthy for the last 5 years when I was paying premium. So I get a bonus for staying healthy. That's what you get as a reward from your health insurance company. If I miss one premium and I completely forget it for the entire year, I don't revive the policy, those, I would say, brownie points are those benefits that I get additionally because I stayed healthy all this while will also be withdrawn. So it's loss on both sides. Like, I've lost all my hard work of staying healthy, being consistent and taking care of myself. And I will have to start from day 0. Waiting periods are applicable. I'm risking myself that if anything happens between the two phase, I will have to use up my savings for it. So yeah, but they do have that period of 7 to 10 days. Again, it's very company specific, but they do have 7 to 10 days. If I have just missed the premium and I've realized it, you can revive the same.
Thank you. Very, very nicely explained. Thank you both.
Thank you. Anything else anyone would, or not just with regards to what we've already discussed, any other jargons that you've heard or anything that you feel that you would want us to address, or I think we are done.
You'd mentioned riders and life insurance. Are those the are the riders basically, like, for example, it's an accidental death or an death or a Y death? Are those called the riders?
Yes.
Okay.
Critical illness. So Nidhi, like critical illness, disability, accidental, those are the riders that you can get in term insurance. And the reason we encourage, and we really encourage that, is, for example, let's say if someone took a health insurance and they got breast cancer, right? Now, while that you do have the health insurance to take care of all the hospitalization and the medicines during the problem, but what also happens is, because of the illness or the nature of it, you might not be able to work to the same capacity that you were before it, right? So your economic value, there will be an economic value impact. Your salary might get impacted, or if you're running a business of your own, you might not be able to earn to that level that you were doing earlier after the issue. And hence, taking that rider in term insurance is not going to pay for the hospitalization, etc. But what it will do is, the moment you get discovered with it, you will get a blanket check of whatever rider value that you have taken, so that while you're dealing with your health issues, you also don't have to worry about, oh, I'm now earning less money.
So just to add or rather build on what Nidhi just mentioned is, these riders, as an exception, so we discussed, right, like a term cover is so that when I am not around, it gets paid to the family. These riders are exception, that they get paid to you while you're still there. So it depends on the nature of your work profile. Also, like for women, there is a possibility that we attract breast cancer. If I am someone who travels too frequently, I would want something like a travel accidental rider, so that God forbid, if I'm traveling and I meet with an accident and I'm disabled because of it, there is a large sum of my term cover that gets paid to me while I'm still alive. Like I am alive, but I'm physically impaired, but my expenses don't stop, right? So these riders are paid to us when we are still around. And in case if unfortunately it's our demise, then the whole larger sum. So rider is a subset of your cover. So example, I've taken a term cover for 1 crore. My critical illness rider can be for 30 lakh only. So it is not of the same magnitude. So if I am going through a surgery and I am back, that 30 lakh is going to take care of me till I come back on my foot. And my 1 crore of life cover, like if unfortunately which is bound to happen, that if I pass away 2 years or 5 years or 10 years later, that 1 crore cover still stands, which will get paid to my family. So that is like I said, riders are topping, which are to make use when you're still around. But what you primarily need is the term cover. So Bhavna is asking, if you have no dependents, we can't take life insurance, or can we nominate anyone else? Again, Bhavna, the whole concept of insurable interests comes over here. So you can nominate your blood relatives because they still have some dependency on your life. It could be your parents, it could be your siblings, it could be your in-laws. So they have to be some way related to you. It cannot be a friend.
But Bhavna just asked my question actually, because out of curiosity just crossed my mind, given the way family structures are these days, in
Yeah.
general.
Yeah.
Right. You could have, your parents could be no more. Let's say you don't have a kid, like given typical single people
Absolutely.
scenarios, and then they have a partner or somebody, or even a caretaker, typically, as in somebody, exactly, family, friend, close, whatever, whoever you might want to name or call or tag them as. But you cannot. This means you cannot name them as your nominee in both
Not in
life insurance, both. This applies in both cases, as in.
Health insurance, me too, you don't need a nominee because the money is coming to you only. Nidhi.
Okay.
Only
Okay.
arises in case of the life insurance. Maybe in case of live-in partners, there is some clarity that has come very recently, but I'm not very confident about it. We'll have to cross-check. But I do remember reading some clarity by the Supreme Court on live-in partners per se. But if it's not live-in, then I don't think you can. I mean, you can't just nominate a friend.
and not
No, Bhavna, honestly, sorry. I just read Bhavna's question. Sorry. No, Bhavna, my question also comes from being the way the families are structured these days, right? There are n number of people who are old age people, or anybody for that matter, who living lives by themselves, totally have no connection with their kids. Sadly, I mean, strained relationships in that sense.
true.
And they don't, whatever. I'm just saying, right?
Yeah.
Or their parents are no more, or they have just siblings, they have no contact with the siblings of blood relation, and they have no kids of their own. But they do have people who they are close to and who are taking care of them or whatever, and in a life in general. So in those cases.
I mean, yeah, it would get slightly tricky to nominate them, to be honest, as of today. I do, like I said, I think there is some clarification
I
by
think,
the
I
legislator.
think, yeah, I think it's a policy. One, if you don't have any dependents, you just can't take it, right? If you can't show that there's
It
any
is
It. I mean, the whole
actually
idea of it is then negated, right?
right? Yeah, makes sense. But
Yeah,
the
I mean,
thing
then
is
you'd
that
rather have health insurance, and you can take things like you can take accidental riders or some of the riders without really taking life insurance. So you can do that. You can just take an accidental rider or a critical illness rider without taking life insurance. So then that's, I mean, in any case, you're not really leaving the money behind to anyone. It's for your protection.
and the
yeah, I think
second
to the
point
question, for example, if you want to leave it for a caretaker or something,
I
like
was
I
just
think you
coming
were
to that.
question, like a
You
single
can't do
woman,
that, Bhavna. You can't.
yeah,
I mean,
the policy doesn't allow it.
Also, I think it's also a question of insurable interest, right? Because especially in terms of caretakers and all, once they open it, then you don't know the circumstances under which the person who's sort of being taken care of has signed off on any documents, whether in sane mind, invalid hai, valid hai. It's some of those are very tricky areas that you get into then.
And I would just say on a second, or rather on another thought to it, if it's a caretaker, like I am aware about a lot of senior citizens who've lived with the caretaker for like 10 years, 15 years. They've taken care of them through and through. For a caretaker, your value or our life value will not be 1 crore worth because they'll find another job. However, what I have seen that they've left for them, literally written in their will, is a part of cash that they hold in the account or their FDs. They write it in the will that whatever proceeds are, say, I have 1 crore worth of FDs, of which 15 lakh, 20 lakh, 30 lakh worth of amount, I would want to, I assign that to be given to them just for being loyal to me for all these years. So I'm talking about a very genuine and a real scenario. It's not a hypothetical scenario. I have seen senior citizens who have lived with caretaker because their partners have passed away, kids are settled abroad. There is very little connect with their siblings. They are equally old. So, they are all in the similar age bracket. So day in, day out, they live with their caretakers. So they kind of make them a part of their will, where their FDs, savings account balance. It's rare that they have stocks and mutual fund, but they don't assign stocks and mutual fund to them. They liquidate them and pay it off as cash because that's more valuable for them. Yeah. Do you consult for will writing? That is something that Gayatri will get back to you all. We do have something around that as well.
Yeah, we do.
We will be doing a session around that also.
Yeah. I'm not sure if you're doing a session with Sipping Thoughts, but we do have partners that we've partnered with on will writing, and yeah, I think we.
But isn't the will again a very tricky thing? In case it always be questioned by the kith and kin, and is even.
I think that's exactly why it's very important to know. Like I've been a banker for 2 decades, and I know that a lot of people think that nomination sort of does the trick, and I don't want to get into the topic at this point because it's a huge topic, very specialized. And we can, it's a whole hour worth of conversation by itself. But yeah, that's exactly why we need to know a little more about why is it important to bequeath your assets, how nomination or second holder is not the same as writing a will, what's the difference between a registered and an unregistered will, what's a probate. Some of these are very basic questions and things that we should know in today's time, and people take it for granted completely. And I've seen many cases in my working career, or families, even with simple family structures, get into a lot of trouble just because they didn't do these basics right. So yeah, I would I mean, someone from the Sipping Thoughts team can contact Gayatri, and we can figure out how to do this. Or we can also if you join the Money Club, then I'm sure Gayatri keeps sending some of this information out. But like I said, it's a specialized topic in itself and a full conversation.
I've also dropped the Money Club link here, so feel free to join in. We already have a small group of around 10 to 12 members. So yeah, you can join in and I can share more details there.
Great, thanks. Thank you. You've been a lovely audience, and thanks, Nidhi and Bhavna. I mean, I think it's great to come across, sessions where even if 1 or 2 people participate like that, it really keeps us going and, makes us feel like we are doing something worthwhile. So thank you for your participation, and I hope we were able to answer all questions. And
I think beautifully answered, and the mutual fund session was also very, very good. And I think the beautiful part is when the unbiased opinion that you bring in, like you mentioned today, the ULIP part, the other day also in mutual funds you mentioned, this is, I think the advice that we're missing, when you go to a mutual fund person, they will only tell you things only where they get commissions. So I think getting that unbiased view and getting, pros and cons of that, I think is the most helpful thing, because that's where you can make a choice in terms of financial freedom. Otherwise,
Yeah, thanks, Pavna. Actually, you're so bang on. That's actually the reason why we do these workshops, because we do recognize that we, and all of us have been party to it on one side or the other. We get sold products to in financial services specifically, rather than saying, oh, this is where I am, this is my goal, this is what I need in my life with my money, in my circumstance. And like Nidhi brought so many specific cases, and it's true, it's each one to their own, but we just get things sold on to that are made for blanket or one size fits all solutions. So and that's what we intend to do. Hopefully we've left you with enough at least enough knowledge to ask the right questions the next time you get sold on a product. So that's I think what the endeavor was. Thank you so much.
Thank you. I think we should thank you, Nidhi and Zeel both, and also Sipping Thoughts for bringing you on board for such wonderful sessions. Because yes, people are selling products and services.
Yes.
The basic questions aren't answered,
Yes.
and there are always specific cases, exactly, and it varies, and you just go around in circles, and your questions are never answered. That's where the problem comes in. So I think absolutely wonderful. I missed the session on mutual funds. I guess I need to find a way to watch it.
Do contact Gayatri, Nidhi, because we keep conducting workshops for a lot of communities. A lot of them we just do for our own communities, and you're most welcome to join in the next one.
Thank you. Absolutely will.
Thanks. Thank you. Thank you. Thank you, everybody. All right. Have a good evening and a great weekend. Bye. Thanks, Sipping Thoughts. I think you might want to say something, or shall we stop the recording at this point? Okay.